And then in 2020, I think this was really the kickoff start for institutional buying, when Saylor showed all of them saying like, hey, there is a traditional company that is listed on the publicly traded stock market, then can just go all in Bitcoin, and the regulator like is not shutting my office down. I'm not going into jail. I can just do that. Now we have what's around 200 publicly traded companies around the world that did the same thing that Saylor does, not the same thing, but like also buying Bitcoin. And now I think 2025 might be just the beginning of the same thing with nation states saying like, hey, we also want to be sovereign. If everyone is moving to this Bitcoin state, like we don't want to be holding like worthless fiat things. And we knew about gold, but gold is kind of old. So we want to have some Bitcoin. And I think that's just happening slowly. And I think we will look back in 5-10 years and saying like, oh, wow, that went quick. Like that was really fast, but we are seeing like the slow first movers already coming in.
Yeah, 100%, man. I mean, you think it just like, if you look at how fast Bitcoin's moved over the past 5 to 10 years, and, you know, when all of these things are really exponentials, whether you're talking about the compounding interest or kind of Moore's law or Metcalfe's law of network adoption, we're really at the beginning of all of those stacks. I mean, it's really less than 5% of people. So the vast majority of individuals is still to come. When you look at corporations, it's only a small percentage of actual corporations. And at this point, it's kind of this weird niche Bitcoin treasury company that they understood it first, and they're leverage buying it, and they're taking advantage of this ephemeral moment where suddenly kind of everyone's suddenly realizing, just like this awakening to the debasement trade. As soon as you see the debasement trade, you're like, okay, well, what does debasement mean? Anyone goes and Googles it, and they're like, oh shit, they're debasing the money supply at 8% a year globally. It was like, well, half of my portfolio is sitting in bonds that maybe yield 4%. So I think what Saylor saw, like before anyone else saw it, I think initially he was like, hey, my cash is a melting ice cube, I need to protect it. And then he's like, well, if my cash is a melting ice cube, what else is melting ice cubes out there? That led him to kind of like look at this fixed income market, which is $300 trillion plus worldwide. That is all negative yielding dead money. Because I mean, at the top end of that, if you're yielding 4.5% and they're debasing the currency at 8%, you're negative yielding, you know, about 3.5%. So it's that whole pool of dead money. He's just offering new products that are superior, that could actually hurdle the debasement rate. And I often hear it was like, well, why is Stretch or like Strike, why are these products paying 10%? And I was like, well, because he's trying to create real yield, not just nominal yield. And he's trying to create a product that, as people wake up to this idea that money's being debased, the hurdle rate is the debasement rate, and I have to beat it. He's trying to offer a fixed income product that it can actually beat the debasement rate. So he's looking at this $300 trillion of global dead money. And it's just this ephemeral moment that he can kind of create these conduits or these pumps to just pump that dead money into actual yielding money. So that's kind of an ephemeral thing. I think what comes next is, okay, a few companies are going to be able to do that in size. He's probably going to be the one that's the largest, the safest, and will get market share, kind of a Pareto principle of like the top 20% will take 80% of the market share kind of thing. But what's to come next, I think, is all the other corporates that don't necessarily want to lever up to buy Bitcoin to try to get Bitcoin per share. They're literally just going to cash flow, realize that their cash is being destroyed. They only cash for a corporation is really a liability because they only have a few things they can do with it. And once you can invest it to grow, you can buy back your shares, or you can just hold it in cash like these really behemoth companies like Apple are doing, or like that are just sitting, and they're just sitting and dying cash. So they're just getting chewed on at 8% a year. But I think what comes next is not these companies that are really trying to profit on the ephemeral moment of figuring out the fixed income is dead, or that the they're like there's only going to be a few of those. But it's going to look like the internet itself, I think, where in the beginning of the internet there were internet companies, but today there's not internet companies. There's just companies that survived the migration to the internet age. And right now we look at Bitcoin companies, but in the future there's not going to be Bitcoin companies. There's just going to be companies that survived the migration to the Bitcoin age, and those that did not, that will just go out of existence. Because if your competitor starts saving in something that CAGRs at 40% a year, and you're saving in money that's getting chewed on at 8 or 10% a year, they will defeat you. You will go out of business. You will not be able to compete. So, all that to be said, I think the vast majority of individual adoption is ahead of us. The vast majority of corporate adoption is ahead of us. The vast majority of financial adoption is ahead of us, because I think, RIAs from Morgan Stanley, I think, are basically just getting the permission now to go and actually solicit to their investors that, hey, you might want to put some money into this debasement trade. And then virtually all of the nation state adoption is still ahead of us. We have El Salvador, Bhutan, and I think Luxembourg recently joined, but the large nation state adoption, that's all still ahead of us. So, yeah, it's going to be really interesting where we fast forward 5 or 10 years. It's going to be like looking back 5 or 10 years. It's almost like, I feel, the way I think about this sometimes is how you don't really necessarily notice, maybe, say somebody's getting fit and they don't really notice the results because they just see themselves in the mirror, they're brushing their teeth every day. But everyone else that maybe hasn't seen them for 5 or 10 years suddenly sees them, and they're like, holy shit, man, you look great. You got ripped somehow. It's like, but they didn't notice that gradual change. When we pay attention to Bitcoin as close as we do every single day, we don't notice these gradual changes. And we forgot that the idea of, a strategic Bitcoin reserve, or the idea of the heads of European central banks talking about Bitcoin in earnest, or the idea that corporates would be buying billions of dollars of Bitcoin a week, or the idea that the inflows into it, like the idea that there would be a Bitcoin ETF, and then the fact that it would be the greatest performing ETF of all time and would surpass like $100 billion of inflows. All of that, 5 or 10 years ago would have sounded like a complete fever dream. So I think the same thing is going to happen over the next 5 or 10, because in my opinion, it feels like, I mean, it doesn't mean that we don't have work to do, but it feels like Bitcoin is kind of reaching this level of criticality that if it's not going to zero, it's going to just start to eat the monetary premium of everything. And if that's true, it's going to run so much farther and so much faster in the next 10 than it's ran in the last 10.
I 100% agree. And I, I want to just add that before I show this chart, I think Bitcoin has by far the best marketing team ever. They are the most resilient. They're the most creative when it comes to memes. And this is how we memed Bitcoin, inflation, debasement, fiat currency, all those things into the mainstream narrative. And BlackRock and all of them are just now picking it up. And I want to show you something because I haven't looked it up before. But when you was telling about that and like people Googling debasement now, I was curious if people actually do that. And man, they actually doing that. I want to show this to you. This is the Google Trends for the blue line that's very small in here for the debasement trade. Obviously, a very specific term that just got now popular that has like 0 Google Trends and now is going up to like 1 or 2 or 6 or something like that. But then I was like, okay, maybe I have to be more generic. And I searched for debasement. And the last 5 years, debasement was kind of a topic going up and down, going up and down. But now all of a sudden it's going up like crazy. And then I was like, okay, what if we look back a little bit more than 5 years? Because we can look back to 2004. There we see one time back, I have no clue what happened here in 2012. I haven't gone the rabbit hole down so far, but apparently we are now at like an all-time high of people Googling the debasement trade or like debasement in general. And this is kind of interesting. And this is kind of giving us data to what we have just said the last like 31 minutes here on the podcast where, mainstream is talking about it. People are interested in it. And then my question of like, okay, we are now getting the problem really in the forefront of everyone. How far till everyone is Googling Bitcoin? Like how far till everyone is like, oh, those people that talk about the debasement trade, talk about Bitcoin, like maybe I should look into that. So like, and yesterday on the live stream, someone asked me like, hey, do you think that we have an extended cycle? And I'm like, I have no clue. We always said that we have an extended cycle. Like every cycle we had that theory about a super cycle. I don't know, but I feel like this cycle has the most indicators ever for an actual extended cycle, because I don't feel like the demand for Bitcoin will slow down in 2026 like at all.
Yeah, yeah, I would agree with that. It seems like I think of the early cycles as kind of a good analogy would be like a poker game. I think the only people around were people that were kind of retail traders, and they were all trading Bitcoin, and they were all trading it against each other. So it was kind of like a poker room where, okay, this guy's been around a couple cycles. He's a little smarter than the tourist that just got off the plane from Cincinnati and just hit the poker room, and he doesn't really know what he's doing. So it was like, hey, I'm going to ride this. I'm going to steal his Bitcoin. I'm going to let it crash. I'm going to buy it back. So it was like, I kind of coined this idea that, trading Bitcoin is us versus us. Holding Bitcoin is us versus them. And I think there's kind of this idea that like it's not, we're not here. I mean, it's not that you can't get rich with Bitcoin. A lot of people did, particularly in those early days and those smaller market cap cycles that really would rip. And if you rotated that correctly, you could make a lot of money. But what we're really doing here, and the reason that I know you do what you do and I do what I do on my podcast, is we're building a revolution because we're up against a system that is just not serving people. And if you see the solution, you need to try to share that solution with people. Because I sit around and I just like scroll TikTok and I see people that are just at their wits' end of despair because they're just getting squeezed too hard and they don't know how to get out of it. And they're sitting here and they watch their cable news channel of choice, and they just tell them to hate the other political candidate. Meanwhile, no matter who gets elected, this math marches on, the spending marches on, the deficits march on, the interest keeps getting bigger, the debasement keeps accelerating. So they feel the anxiety, but they don't know where to go yet. And I think it's just a matter of, that's trading Bitcoin is not the point. And if anything, we just saw this whole leverage freak out with this last liquidation. It was the largest Bitcoin liquidation of all time. I think, well, crypto liquidation, it was 19 billion. The part of Bitcoin, I was trying to figure out how much of that was Bitcoin liquidations. I think it was like around 5 or 6 billion of that, but it was larger than FTX. It was larger than COVID. And the fact that Bitcoin just swallowed that, absorbed it, and just marched right back up to 115, 16, whatever it is, but just absorbed the entire liquidation like a champ, way better than the FTX liquidation, way better than the COVID liquidation. So it did have the same kind of cascading liquidation effect, but there were just immediately buyers to step in and stop the bleeding and kind of march higher. And I think we're just looking at different market dynamics than any of those prior cycles. I'm not saying that cycles are necessarily dead. I just don't think that Morgan Stanleys, the Black Rocks of the world, the Fidelities of the world are going to FOMO trade the way that retail did. I don't think they're going to be the stupid poker player getting off the plane from Cincinnati. So I think the players are different here. I think they're going to be much savvier about how they trade and how they hedge their trades. And I don't think you're going to see that kind of just supreme violent swing again. And I completely agree with that sentiment of this idea of kind of diminishing returns when I think we're getting closer and closer to Bitcoin feeling like a mathematical inevitability, and 95% of its adoption story in every single allotment bucket is still ahead of it. I find a really hard time thinking that it's going to slow down. It seems to me that it's much more likely that at some point you kind of hit this point of no return where every person realizes that this thing's not going away. Every corporation realizes this thing's not going away. And every nation state realizes it's not going away. And if it's not going away, the only way to win is to play, and you have to get some. And I think I think it probably accelerates. So I don't think there's diminishing returns. I think there's accelerating returns. I think it actually probably goes, instead of going concave, it goes convex. And I think you probably see something to the upside. I'm not saying it's a super cycle. I don't really know nor care. What I really think what we're doing here is just realizing that the old system is dying and has been really underserving everybody for a really long time. And our best way to build our way out of that and to build a better future for our kids and our kids' kids is to get as many people into this new network as possible, because the Bitcoin network is mathematics, but the Bitcoin network is also people. And the more people that come to it and the more people that advocate for it, more people that hold it and the more people that fight for it, the stronger it gets and the more difficult it is, more impenetrable it is against attack. And when the agonal, like when that caged animal finally really lashes out because they really are losing control, it's going to be stronger if we get more and more people on board. It's like it's very difficult for a government to come after Bitcoin if 60% of its citizens hold it and it's actually serving them. So, and it doesn't even really have to be that big. I always bring up the example of, at least in the United States, when I learned about the American Revolution, I was kind of under the impression that every single farmer, every single person with a musket grabbed it and ran outside and was shooting at redcoats. And when you really look at it, it was only about 7% of the population really participated in the American Revolution, but it was this intractable minority that was able to just exert undue influence. And I think, Bitcoin's at about 0.5% adoption. If we could push that adoption toward more of a 5, 7, 10%, that just becomes that intransigent majority that just will not bend. That's really all it takes to exert real influence in the world. And the closer we get to that, the more like it's almost like we can be controllers of our own destiny. It's not that Bitcoin is like inevitable, but if we go to it, it becomes inevitable. Like the more people that go to it, the stronger it gets, the more unstoppable it gets. And we have it's our best chance to de-seat this monetary monopoly that is just completely destroying the average person.
Yeah, it's also this gradually then suddenly moment. I had Parker Lewis on the show I think just like 2 weeks ago, and I asked him specifically, what do you think will trigger a suddenly moment? And he says there's like many things leading up to that. There's like a lot of things that he kind of sees for the suddenly moment to actually accelerate. But the best trigger point, the best way of actually knowing is like if one of the G3 nation is seeing something similar to a hyperinflation. If you see one of the G3 nation currencies like the yen, euro, or US dollar having a really high inflation rate and starting to really in a massive way crumble, this is when the suddenly moment is already in the accelerating phase. There's leading indicators, there's like things way before that. But if one of those three things are like crashing, you're like, oh, let's better run. And this is probably also where the main majority of the people are like, we really have to run now. Where before now it's kind of starting, people are talking about the debasement trade. People are like, Bitcoin is a unique diversifier in my portfolio. Larry Fink also thinks about like, hey, this is gold 2.0. You shouldn't have all your money in Bitcoin, but you should have some money in your Bitcoin. And then it's like, oh, okay, the system is really wrecked. We really need a lot more Bitcoin. And the suddenly moment comes a lot faster than we think. And so this is kind of interesting for me. At the same time, I'm thinking, I don't want to have the suddenly moment too fast, because you think about all the people that are in your family, in your loved ones, and you're like, they all still haven't got Bitcoin. And I mean, I have a really big family of like a lot of people. And the closest to me all have Bitcoin, like my sister, my mom, my dad, and like my girlfriend, like all of them have Bitcoin. But then they're like so far out of the family of like, oh, he does not have Bitcoin. Oh, he does not have Bitcoin. He still thinks Bitcoin is spectacular, speculative.
Yeah.
He thinks that Bitcoin is bad for the environment. And then it's like, yeah, if they don't wake up, it will hit them really hard. And I don't want that. So like, I, I, I think, as you think, that there will be a point where it's just like really suddenly, but I weirdly enough hope that it's just like very organically and slowly growing in Bitcoin. So if you think about Bitcoin hitting like $1 million next year, I wouldn't be that excited about it. I'm more excited of Bitcoin hitting 150K at the end of 2026. Like that I would be stoked about that. Like, because this means like Bitcoin is just keeps growing slowly and organically, and the fiat system is slowly crashing, but not too fast, because this gives the people actually chance to like see the Bitcoin thing. We all know how long it takes for actually someone to understand Bitcoin. Like it took me 3 years from first hearing about it to buying my first few Satoshis. And then it took me another 1.5 years to go all in. So it took me like 4.5 years to go from 0 to 100. And so 4 years can be a lot. Like in 4 years, Bitcoin can go from like 100K to 2.5 million or something like that. Do you get what I'm saying?
Yeah, 100%. Yeah, I don't hope for a crash either. I don't hope for a melt up either. I think it's when I say that it's going to kind of accelerate it. I mean, that very well could happen, right? I mean, everyone could panic, everyone could jump in, like the price could go crazy. Like that would not be great. Like we don't want to see a Weimar chart of some kind. Like that is not the goal. I think it's a matter of paradigm where it goes from this idea that Bitcoin is crazy or speculative or stupid to inevitable. And like everyone you talk to suddenly is like, well, of course, yeah, you should have some Bitcoin. Of course it is. Just the same way that the idea that the old fiat system dying sounds crazy and then it kind of starts to feel inevitable. And I think there's certain canaries in the coal mine of like when those things start to happen. And I think in the United States now, the big one I saw was as soon as the interest rate on our debt became larger, or the interest payment on our debt became larger than our entire military expense year over year, that just tells you, like, because from my economics background, military strength is built on economic strength, and you can't really have one without the other. Like if you don't have economic strength, your military strength will inevitably deteriorate because it's just built on, it's built on popsicle sticks. So if as long once we got to that point, and it's only going to accelerate because we could probably bring our military spending down in the United States. We spend about 10x as much as the next military competitor does, but that interest expense is going to increase. It is going to accelerate. And I think what you saw in the United States this year was we took all the other options off the table. We kind of thought, okay, we're going to do austerity. We're going to do this Doge thing. We're going to cut spending. We're going to do XYZ. Elon shows up. He offers he offers to try to help with that problem. Every Tesla dealership burns to the ground. He saves about $150 billion and then gets thrown out of town. And no matter what you think about the whole thing politically, what I think it told me was austerity is never going to happen, because that was our best bite at the apple and it failed miserably. I don't think a more capable entrepreneur is going to come to town next time and be more successful at trying to help us stop our spending problem. So I think what that just proved was we are not stopping our spending problem. Like that was our last best attempt, and we didn't even make an ounce of progress.
Thank you for watching this video. This was only a snippet of the podcast. And if you want to watch the full episode and get all of the context of this episode, you can click right here or here. Oh, maybe also here.